want to talk about Warner Brothers,
Let's
Netflix?
do it. We talked about it a little bit a
We
few
did.
weeks
We
ago.
talked about it a few weeks ago before I think before Warner Brothers finalized that they were going to move forward with Netflix's bid,
Yeah,
which was $27.75 a share. But
a
before
lot
we
higher than I was
a lot
expecting, to be honest.
Yeah, I didn't really know what to expect. The initial offer from Paramount, because they started this whole thing, was around $21, I believe. So I guess like maybe if I was guesstimating, I would have said it could go up to 25 or something. But like it is crazy because the stock was trading at around $10 at the beginning of the year.
Yeah,
So and it's only gone up because of this bidding war. It hasn't gone up it's been stagnant otherwise.
right. Revenues are
So
down, profits are down. Like it's never been profitable company. So stock price has quadrupled because of this bidding war. So yeah, it's kind of crazy. They were not in a good position. I mean, basically, by all measures, they were in a similar to Bumble position, where you you
yes.
know,
And
revenues are
similar
down, like profits are down. But
similar to Bumble in the sense that I am a big fan of the CEO, Dave Zaslav. I think he's cleaned up the company a lot. And pretty much since he's joined, or since technically he was the CEO of Discovery and then Discovery acquired Warner Brothers. But since that has happened, his goal has been to have someone else acquire Warner Brothers and to clean it up for someone
yeah,
else. At least is
what do
my
you?
take. I don't think he said that out loud.
Yeah. So, are you? What do you think of Netflix trying to buy them? Like, do you think that's a good thing for Netflix, or do you think that's too much of a distraction?
So
What are your
I
thoughts?
I think it's a win for Netflix. I think it's a win for shareholders. I think it's a win for David Zaslav. I think it is a potential big loss for the consumer. Um,
Okay.
so there's
Why do you
two
think that?
angles. Yeah, there's two angles to this. The first is there are fewer and fewer large movie companies. So like Disney acquired Fox a couple of years ago. Now we have potentially Netflix acquiring Warner Brothers, especially with Warner Brother or with Netflix acquiring Warner Brothers. Like Netflix does not believe in releasing movies into theaters. Now,
Yeah.
uh, I know since this has all happened, they've changed their tune on that, and they
Yep.
they have said, no, 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 Warner Brothers movies will still release in theaters. I mean, I'm sure that's true. That'll be true for the near future. I just am hesitant to believe them because they've had plenty of movies in the past that they could have released in theaters. Like they bought the Knives Out franchise,
Right.
and the first one did really well in theaters. The second one they released in theaters for like a week or two, and then they pulled it and
Yeah.
uh
But
put it on
but it
Netflix.
might be that the theater business is just dead to begin with, right? Like,
So
and it could die even on its own, even if like you keep Warner
I think
Brothers
that's
as a
very
separate
likely.
entity.
Yes, so that is point number one of like the consumer that enjoys the movie experience. This is just accelerating the death, which is probably inevitable. So my
Okay.
bigger issue is quality of content. So Netflix's quality of content is not great. I'm not saying that all their shows are bad, but they release a ton of stuff because they have a
Yeah.
different like green light philosophy where they think more is more, quantity over quality. And that has benefited them in certain ways. So like there was no telling that Tiger King was going to be a viral hit. And
Right.
most places maybe would have not green like that or greenlit that. But uh that has been a big success for them. But the quality takes a hit because there's only so many dollars that can go around, and they can't afford to like go all in on individual properties outside of a few. So like Stranger Things, for example, right? Like where they
Right.
know that has a track record. Where Warner Brothers has very strong quality, specifically
HBO.
on the HBO Max side. Arguably, they have the best quality content. The only other streamer that I think is at the same level is Apple.
Yeah.
Um, so it's a
Apple
little,
might even be slightly better.
Could be. Yeah.
There's
So it's a
newer, but
little yeah, it's a little worrisome to me, uh, having Netflix acquire Warner Brothers because of this quality issue. Now, it's the question is who's going to rub off on who, right? Like, is Netflix
right,
going to rub off on Warner Brothers, or is Warner Brothers going to rub off on Netflix? Because it's if it's the other way around, then this could be a huge win. Because I think Netflix is burning a lot of money making shows that like either no one's watching or just aren't that good.
right.
Because you don't need to make that. You need to make content, but you don't need to make that much content. Like no one makes as much content as Netflix right now.
Yeah, yeah. Yeah, those are some great points, and I think I'm in full agreement. So let's talk about the deal terms. Like, what was
Yeah.
Netflix's offer? And I know that Warner
So
or not Warner Brothers, who's it, Paramount, who
Paramount.
is doing a hostile bid. So, like,
Yeah. So
break it down for us.
before we even talk about the deal terms, a little history lesson here is before Paramount reached out to Warner Brothers to offer the initial bid, Warner Brothers was planning on splitting into two companies, uh, their film and HBO division, and then their linear television division. So it was going to be
Okay,
two companies, and that split was going to happen next year. And if Netflix does acquire them, that split will happen next year because Netflix is only interested in the film side for $27.75 a share. $23.25 is cash, and then $4.50 is Netflix stock.
okay,
Paramount, since the beginning, has wanted the entire company. And I think the fact that they were going to split caused Paramount to put in a bid now before the split happened. If Warner Brothers wasn't planning on splitting, I think Paramount would have kicked the can down the road. There was no pressure to acquire them.
gotcha.
And the reason why Warner Brothers wanted to split, going back to David Zaslav's goal, is they wanted to get acquired and they were basically splitting the company into their stronger assets and their weaker assets.
Okay.
So then the question is, well, why does Paramount want to own everything?
Oh,
Well, the linear TV side, they own a little news network called CNN. And Paramount CEO is David Ellison, who is the son of Larry Ellison, the
mm,
co-founder of Oracle. And they have very strong ties to the Trump administration. I think there's an argument to be made that CNN is of high interest to them, in addition to
okay.
all the movie stuff. Plus, as a part of the hostile takeover, so think I skipped over that, but you mentioned it. Paramount is trying to do a hostile takeover now that they lost the bidding war to Netflix, where it's $30 a share, all cash. Where are they getting all that cash from? Uh, they have
Larry Ellison's couch change, right?
that's majority of it, but then there's also Jared Kushner's private equity firm is
Okay.
backing it. So another tie to the Trump administration.
Oh, that's interesting.
Yeah.
So there's a good chance that the Netflix deal is going to get killed, is what you're saying.
I think there's a good chance it gets killed. Plus, ignoring all the political stuff, Netflix is a much larger company than Paramount, right? So, like
Right.
a smaller company acquiring another smaller company, I think it's just easier. Plus, they don't have to do the split, so it's also a quicker process. Where the Netflix deal wouldn't actually go into effect until at least a year from now.
Plus, it's a higher price for shareholders, right? Like it's $30 as opposed
Well,
to
so it depends on how you look at it because they're buying both items, right? So like it's like Netflix only wants to buy the pen, and
right.
Paramount wants to buy the pen and the ruler. So the question is, how much
How
is the
much is the
ruler if we know that this is worth $27.75? Now, David Ellison has said the ruler or the linear television is only worth $1 a share.
yeah?
So
I've
then
heard
they're
that.
offering way more. But, we don't know. Now, as a shareholder, or if I was a shareholder, which I'm not, I would be okay with oh, they're just kind of bundling these two together. even if there was some sort of discount, like I'd be okay with that. I think $30 a share is totally fair, especially given that they were only trading at $10 a share earlier this year. And I don't think their linear television business is strong. Um, but yes, they are offering more, but it's hard to know if it's truly the better deal because it's a question of, well, what would that other company trade for after Netflix acquires just the film side?
And if we look at the stock price right now, this is what's fascinating to me. Like the stock price for Warner Brothers Discovery is already right now trading at almost $30 a share. It's up like 4.5% today too. So like people, I think, are expecting the hostile $30 bid to go through as opposed to the other, and they're already pricing that in. Like, what's the upside from here? If you were a Warner Brothers Discovery shareholder, like, there's no reason to hold your stock anymore, right? Like, what are your thoughts
No,
about that?
I totally agree. If I was a Warner Brothers shareholder at this point, I would be selling. I
Out.
mean, the only chance of the price going higher would be if Netflix increased their offer or like something crazy happened. But I think the probability of all that is low. And even if they did, I don't think they're going to increase it by that much more.
Right, right.
Um,
Plus, Netflix's
and
stock has gotten hit since the offer. So, like, the market is viewing it as a very negative deal for Netflix in particular. Like,
yeah,
they're overpaying.
yes, that is true. Um,
What were you
the
going to
the
say?
other
And what?
the other angle I want to take on this in terms of like the positive side of Netflix potentially buying Warner Brothers is I was thinking about when has a disruptor purchased the disrupted? And I don't think it's really happened that often, specifically in tech. Like we've had examples of dis the disruptor being bought by the disrupted, a la Facebook and Instagram.
Right.
But uh, we really don't get much of this. The only example I could think of was, and this is a bit of a stretch, Amazon buying Whole Foods,
Mm.
where online shopping buying, physical shopping.
But
And
technically speaking, Amazon never like penetrated the grocery market in particular.
I don't, they have Amazon groceries, but that might have been because of the Warner Bros, the Whole Foods deal.
Yeah,
I don't
I mean that
remember
happened
what the
after.
timeline was,
Yeah, I think they
but
tried several times, and several people had tried doing the grocery business, but they could never like online grocery delivery, but nobody succeeded at it.
right. But I do think that was, and this is just my take. I'm sure other people will disagree. I think that was a win as an Amazon customer. Like you
Yeah,
get better integration of Amazon groceries, of groceries being delivered to your home, which I used to use when I lived in the city. You get when you go to Whole Foods, it's much easier to return your Amazon products. You can return your Amazon products anywhere. And
right.
then if you're an Amazon credit card holder, you get all the Amazon rewards at Whole Foods. So like there are definitely elements of this deal that like maybe it's not as bad as I'm thinking. Maybe they're going to do some great integrations that, you know,
Yeah.
time will tell. But
One of the ways that I look at it is that because the whole industry is struggling, like meaning not many people are making money off of creating content like HBO, for example, or HBO Max. Even I think Apple TV business, the content business is like more uh, cash consuming than cash generating. I think that's true also for Amazon Prime. All of these companies have been like investing in this sector of their business um, for a long time now, and like they borrow heavily to make this content because like these shows cost hundreds of millions of dollars to produce. Um, and at some point, the money is going to run out, and I think post COVID, that has already begun. Meaning, like AT&T was who owned HBO Max was like, wait a second, this is like too much for us. Like they spun it off, and they're like, now it's your problem. Like go figure it out. And of course, Warner Brothers Discovery, since it's been a publicly traded company, its stock price has less than halved in the past 4 years, and it's only up because of this deal. So Netflix is the only company that is making money producing content and doing all of this stuff. And in a way, it's a lifeline to the content industry. So I think like it might be a win for the consumers. I'm not sure it's a win for Netflix. They take out a competitor, but that competitor was like on a downward
They're going
spiral
to own
anyway.
they're gonna own so much IP that I think it's gonna be a win, like Harry Potter,
Yeah.
Scooby-Doo, DC, like,
Yes.
Game of Thrones. I think that's a very big win. I mean,
That
it's
is a
hard to
big
know what
win,
the
but is it
monetary
$80
value is.
billion worth
Right.
of win?
Exactly. Yeah.
Like that's the big question. And that, th- most of that content is historical, meaning it doesn't have the same viewership today that it did. Like, nobody's watching Game of Thrones today. They're watching the sequel to it or whatever. Maybe a fraction of people maybe are watching the sequel to it. Um, but HBO has been like pretty good. It has a great reputation of creating great content. So, y- you know, maybe they're acquiring some of that for the talent. But fundamentally, it was sort of like on its way down. It'll be interesting to see how this plays out. One of the other things that Netflix may have been doing is just trying to keep it out of the hands of its competitors to not allow them to get stronger, knowing that the DOJ is not going to approve this deal, right? Because they're the 800-pound gorilla. They're the only ones making money, and they're like now acquiring the second. Depending on how you look at the sort of market, they're essentially acquiring the closest competitor to them, HBO Max. Um, and that's probably not going to be looked upon favorably in any kind of administration, Department of Justice, not just the Trump administration, who might have closer ties to the other side.
So
So
my
yeah,
my pushback on it being a defensive move is, one, I think Paramount has one of the weakest streaming platforms in Paramount Plus. So it's
yeah,
not like it's, I don't know, Disney Plus, which already has Hulu. Like it's not, they're not creating a monster. I don't think Paramount Plus HBO Max, like most people are only subscribing for HBO Max in that case anyway. And
right,
then
right.
the other piece is there is a breakup fee. So if this deal does not go
Mm.
through, regardless if Netflix pulls out or if it doesn't get approved by the government, Netflix has to pay $5.8 billion to
Oh
Warner
wow.
Brothers.
Oh really? I
So
did not know about that. That's a huge deal.
yes. So if anything,
That's
I think
interesting.
there's a world where David Zaslav at Warner Brothers is like, you know what? Let's try to do this Netflix deal. Worst case, it doesn't work out. We get $5.8 billion, and then we go to Paramount.
Huh. But if I was
I'm not
Paramount,
saying that's going to
like
happen, but
if the deal gets killed, I think the value of Warner Brothers goes down significantly because
oh yeah,
the only reason it's
it goes
getting
right
this,
back down to $10 or less.
yeah, like maybe like Paramount comes back in with like a $15-20 bid and still wins it because there's nobody else who's going to be around to buy it, right? Maybe Apple or Amazon, I don't know.
See, like I
Um,
would have loved if anyone, if any new player had to buy it, I would have loved to see Apple buy it because I think they're on the same wavelength in regards to thinking about high quality content.
yeah, yeah.
And Warner
Apple's
Brothers
content.
produces some of their shows already. Like Warner Brothers produces Ted Lasso.
Oh, really? I did not
Yeah,
know
and
that.
that's another weird dynamic. So like, is Netflix going to produce content for other people now? Like it's
Yeah. Ted Lasso
yeah,
is like one of my favorite shows. Anyway,
yeah, it's
all right.
awesome.
I think we probably talked about that one
Yes, we
enough
ranted
for the.
enough. I'm done.
And
Okay.
neither one of us has stock in either company anymore. I sold all of
No.
my Netflix shares. I think my last sale was around 800 or 900 bucks. I don't remember, but like
Yeah, I used to own Netflix. I used to own Warner Brothers. I knew Warner Brothers was going to get acquired. I just didn't think it was going to happen this quickly. So,
yeah.
okay,
My sale 800 or 900 bucks was pre 10-for-1 split, so 80 90
right.
dollars somewhere in that neighborhood. And what's funny about Netflix is that it oftentimes comes back around and like dips down below what I've sold it for years later. Like
Yeah,
I sold it in 2018, and then in 2023 I bought it for less than I sold it for in 2018, and the company was like double the revenue, way more profitable, all that stuff. So uh, that cycle has been very fruitful for me, the Netflix
totally.
cycle.
Yeah, if you could ride the waves.